Thank you everybody for those who are joining. Let's give the rest of the people be 2 minutes to join. We should be starting by 12:03 Nairobi time. Thank you. But meanwhile, you can let us know who you are, your organization, and the country that you're representing. The chat is open. And if you have any questions, you can as well start sending them in. We should be starting in the next 1 minute. I think we can get started. My name is Lucy Wamboi Kihonge. I'm currently serving as the head of programs here at Flood Initiative. Just to thank all of you for making time for this great webinar. And we are honored to have you join this webinar focusing on sustainable financing models. And the discussion we're having today is on how best can we accelerate women access and ownership of 2- and 3-wheelers. But before we start, feel free to introduce yourself in the chat by stating just your name, the company or the organization you're representing, and do not forget to let us know the country that you're joining us from. You can also let us know your experience riding or using a 2- and 3-wheeler. Maybe you can also let us know what you call them in your local language. In Swahili, we call them tuk-tuk and boda boda. So this webinar is divided into 2 parts. We have the first 45 minutes where we'll have a presentation, and then we'll open the floor for the next 15 minutes for Q&A. And as we continue, we would like to kindly request that you send your questions in the chat box. If time allows, we'll give an opportunity to a few of you to directly ask your questions to the speaker. Just to mention, this research was conducted in collaboration with Ford Foundation, and it was conducted between 2024 and 2025. For those who are meeting us for the first time, FLON is a women-led organization that advocates for a safe, inclusive, and accessible public transport system. And we do this through research, trainings on behavior and mindset change, and also we conduct movement building. As mentioned, part of our mandate is knowledge generation, and this forms the main reason why we are convening here today. We highly encourage you to keep your questions and comments coming, and please feel free to just follow us on X, LinkedIn, Facebook, and Instagram, and we'll just post that in the chat so that you should be able to continue linking with us. Our hashtags for the day are gender inclusive public transport and inclusive financing model. And throughout this webinar, you'll be able to understand existing policies and regulatory frameworks influencing financing models in Kenya, and especially for 2- and 3-wheelers. You'll also be able to gain insights on gendered barriers hindering women access to 2- and 3-wheelers. Not forgetting an analysis of different financing models. And towards the end, you'll be able to gain insights into the features of a gender responsive financing model. And that's very key. And lastly, you should be able to learn on how to scale and operationalize a gender responsive financing model. And remember, we are talking about access and ownership of 2- and 3-wheelers. With those many remarks, allow me to introduce the speaker for the day, who is Ivan Sumba, currently serving as the program officer here at Flown Initiative. And he's an urban planner with over 4 years of experience in both the public and private sector. His expertise spans urban planning, integrated transport system, research, project planning, and management. His strong emphasis is on inclusivity and diversity in public transport systems, and his work is driven by commitment to enhancing quality of life through evidence-based urban and transport planning. With that, welcome, Evans.
Yeah. Thank you so much, Lucy, for that wonderful introduction and setting this rolling. And I would also like to thank our participants for joining into this important discourse. Over the next 45 minutes, just to pick it up from where Lucy has left, we will base our discussion on the premise that transport system can be systematically studied and improved. And with that, just to make this discussion interesting, I'll just ask this question here, that how frequently do you use 2- and 3-wheelers, what we refer commonly as boda-bodas and tuk-tuks? And out of those instances, how many times have you been transported by a female rider or driver? We can just continue answering this as I set out the stage for our findings. And of course, as to just give a bit of background into the study and the two-wheeler industry, the 2- and 3-wheeler industry, we all understand the important role of transport. And it's without a doubt that the transport drive world economies. When you need to trade, when you need to communicate, when you need to move from one place to another, transport sits at the very center of all these. Today, our focus is specifically on 2- and 3-wheelers, which of course offer important last-mile connectors, especially for the areas that are underserved in terms of the transport infrastructure. To bring this closer into what it generates to the economy, the sector, of course, employs approximately 2.5 million Kenyans, majority of whom are the youths, and it's estimated that the sector generated close to 600 billion, which is approximately 4.4% of the GDP. This is according to the GDP data of 2023. This is what you can see in the pie chart on your screens. So you can see the contribution of the industry towards the economy. Then this now just trying to building on the problem or the premise that I had earlier mentioned, we will focus on financial inclusion as a catalyst for the implementation of Sustainable Development Goal. Our investigation today looks at Sustainable Development Goal number 5, which is focusing on gender equality. Then we are looking at Sustainable Goal number 8, focusing on decent jobs, and 10, which focuses on reducing income inequalities. We understand that despite the sector offering opportunities for both men and women, there is a significant challenges for women trying to own and access the transport assets. These challenges emanate from high interest rates and the challenges emanate from high interest rates and other social barriers that hinder them from participating in this sector. I know one would ask then, why are we not focusing on the sustainable transport options, like the promotion of acquisition of e-bikes? Of course, we recognize the contribution of e-bikes towards the cleaner energy by reducing carbon emissions. However, first, our main aim is to get women into this sector, retain them, and then advance them towards sustainable transport options, while we are trying to demystify the myths around e-mobility. With this, then, we are just going to look at some of the objectives of this study that we conducted. And the main objective of this study was to explore and scale sustainable financing models tailored to support women in accessing and owning 2- and 3-wheelers. The other objective was to identify and evaluate existing financing models that have successfully enabled women to own transport assets. The third objective was to explore the financing models in Nairobi and scale them based on success. The fourth objective was to design a gender-responsive financing model addressing women's barriers to acquiring 2- and 3-wheelers. Of course, we are keen on building partnerships with stakeholders in this space and then scale the operations of the model. And the last objective was to assess the social and economic impact of increased women's participation in 2- and 3-wheeler sector. As mentioned, our goal here is trying to get women into the sector, retain them, and advance them into the sector. You'll bear with me. I'll be rushing through sections of the presentation. But if you have any question, you can just write them down, and then we'll address towards the end of this webinar. And this now sets the stage for just looking at some of the policies and regulatory frameworks that influence the financing models in Kenya and which are applicable to our study. First, we are looking at the Microfinance Act of 2006, which was the first statute that was enacted to provide for the regulation of the microfinance. I won't go through each and every one of them, but I'm just going to mention them. The second was the National Payment System of 2011, the Finance Amendment Act of 2013, and then the other one was the Banking Amendment Act of 2016, the Digital Credit Providers Regulations of 2021. Of course, this is important because it tried to create a fairer lending environment by cracking on predatory lending, those who have hidden charges, and hostile debt recovery tactics, which I know most of us have experienced this, and we'll uncover this in our presentation as well. We also have the Community Group Registration Act of 2021, aimed at formalizing the operations of SACCOs and group registration and holding them accountable. And last year, we had the draft credit guarantee policy. And then now this, of course, we are building on this, just trying to look at how we went about conducting this study. So the design of this study was largely exploratory. We looked at the exploratory study and iterative study, just trying to uncover some of the issues around the sector. And this, of course, we obtained this data we did a purposive sampling, just getting this data from people with key insight into the industry, people from the financing sector, manufacturers, owners of 2 and 3 wheeler assets, and those who are trying to get into the sector, support organizations, and government agencies. And here with me, as you can see, we have the tools and the target that we reached. Of course, we employed focus group discussions, which we conducted with 2 and 3 wheeler women owners and those who are trying to get into this sector. And then we had the key informant interviews, where we conducted these with financial institutions. Those are the banks and the non-bank lenders or the microfinance institutions. We had the key informant interviews with the vehicle manufacturers and distributors. And then we had also the government institutions, both tiers of the government, both at the national and county level. And then the non-governmental institution, what we refer in our report as the support organizations. So these are organizations that work closely with women, working on women economic empowerment and other financial inclusion initiatives. We also had interviews, key informant interviews with SACCO leaders representing the boda industry or the 2-wheeler industry and the tuk-tuk industry or the 3-wheeler industry. Of course, to just build on that as well, we conducted case studies, just looking at the key publications on 2 and 3-wheeler vehicles, and then on gender mainstreaming as well. As you've realized, the focus here is on women, economic inclusion. And then we also developed a checklist, just trying to look at the interest rate, the down payment information, the insurance payment plan, and the frequency of this payment, the loan application method, the processing period, asset recovery in case someone defaults, and then if there's any after-sale service and other training, and then the scalability of these operations, and if there is gender responsiveness identified in the models that exist. Of course, now we can, with that background, I think it's fair just to now jump into some of the findings that we obtained from the women. And for this, from all the stakeholders that we are able to conduct this research with. And this, then we first look at the experiences of women in accessing 2 and 3 wheelers. We categorize these into negative experiences and positive experiences. So first, we'll start with the negative experiences, which is the lack of proper documentation needed to open bank account and secure loans. Of course, with this, then women are often compelled to register their assets under the spouse name. Of course, you become vulnerable to this, particularly in the event of domestic disputes where you're at risk of losing your asset. And then we had the complex loan application processes. We find that women often, they are given a lot of documents to without proper explanation to just, you are taken maybe to the last page of the document, but not keenly taken through every page of the document, explaining in detail what it requires of you. And this, of course, will discourage women from now trying to access and own these transport assets. The other one was the deposit limitations. As you might have seen, we are looking at the property rights, which sometimes limit women from access to collateral as compared to men. So we are looking at an issue of about 10 to 30% of deposit, which at times you can translate that to about 30,000 for a woman. It's often a lot of money for them. We are looking at the unpredictable income as another negative experience. Of course, the sector as it is set up, it's a very informal sector. A minor shift in demand, of course, will either make you default on loans or make your bike be repossessed. We are also looking at the border theft, which is a big issue as well. And then there's accident and medical cost. As you know, according to the 2024 report, border bore the highest brunt of the road crashes. We lost over 1,100 border riders. Of course, with this information, then if you give to a woman, then for her, then it discourages her from getting into this sector. We have the issue of gender-based violence. Of course, there is frequent harassment ranging from verbal, sexual harassment, economic violence, physical violence. Of course, with this, then women are often discouraged from getting into this sector. The other important issue that is often not looked at is the menstrual health management. From the discussions that we had with the women, we found that they lose up to 4 working days in a month due to the menstrual health management. So we are trying to look at if the inflexible financing model often create a barrier to asset ownership. If you are required to submit daily payment, then you will default on the 4 days that you'll be out due to the menstrual health management. Of course, there's another one of lack of transparency, which is closely tied to the complex loan application processes. We have stereotyping. We had sessions with the women who are drivers of tuk-tuks, who are being sidelined from jobs that require them to carry cargo, and then using of digital clockouts. Of course, if somebody cuts off your lifeline to communication and movement, then it discourages you from trying to get into the sector and thrive in the sector. But then with the negative experiences, the sector as well has positive experiences. For example, we have the improved mobility, flexibility and safety, economic independence, and catering for the transport needs in the community. An important positive experience here is the social recognition. If you find a woman who is a border rider, tuk-tuk driver, another woman down there will often try to find out how she's been able to thrive in this sector. And with that, then it sets us to the next level, just like trying to look at the operational costs of 2 and 3-wheeler in Nairobi. So here we're just trying to provide a breakdown of the costs that are associated with the 2 and 3-wheeler industry for those operating in Nairobi. So we are looking at the fuel, which at the rate here we're looking at per day, and then SACCO contributions, the other informal charges such as gangs, bribes, fines. And then we have callers, or what we locally call kamageras. These are people trying to help the tuk-tuk drivers to make their passengers enter the tuk-tuk. And then we have the night guard or night parking. And then we have the parking fees under the Nairobi City County. We have routine maintenance, and then passenger fares. At the end of the day, what we found out was that for those two-wheelers operating within town, at the end of the day, you will be pocketing between 1,500 to 2,000. For those operating outside town, it's between 700 to 1,200. For the three-wheeler sector, at the end of the day, you find you'll be having between 8 to 1,000 shillings. So these are some of the operational costs that are within the 2 and 3-wheeler industry sector in Nairobi. Of course, this data we gathered from different stakeholders. The next one is the role the government agencies. I've talked about both tiers of the government being helpful in just making us understand better this industry. The primary role of the government, of course, is to create that environment for business to thrive. And this they can do by either beefing up security in areas of operations, or either coming up with policies that encourage women to thrive in this industry. And the government of Kenya, through certain initiatives, the Affirmative Action Program has come up with the financial inclusion initiatives. So I'll just go on and mention a few. We have the Women Enterprise Fund, which was established in 2007. The target group here is the women and MSMEs. And then we have the Uwezo Fund, established in 2013. The target for these is women, youth, persons with disability, and MSMEs. And then we have the Youth Enterprise Fund. The target group for this particular fund is male and youth and female youths. The National Government Action Fund, we have the target for this particular fund to be youths, persons with disabilities, and marginalized populations. Of course, these funds have had challenges in terms of their implementation. So first, the three main challenges that arise from these. First is the high default rate, and then the issue of capacity building, people lacking information on what to apply and where to apply. And then, of course, the long application procedures that are often associated with these funds. And with that, we move to now the role of the support organization, what I refer to as the non-governmental institutions or organizations. So for this particular sector, we find that the organizations that work closely with women on women economic empowerment, on women, or just trying to make women thrive in this sector. Some of their roles in this sector include skills development and support, development support and capacity building. We have organizations that often do job placement. Access to information is very important. And then raising awareness on women's participation in the transport workforce. And then we have entrepreneurship and business development support. So these are some of the major roles that the organizations working in this sector do apply in terms of trying to make women thrive in this sector. And just to build on that, we've got to look at the financial institutions. What is their role in trying to promote this sector, promote women to thrive, and the use of 2- and 3-wheelers. We grouped these into commercial bank and the non-bank lenders or the microfinance institutions. We had a criteria that we developed: the loan amount, the financial history, the loan processing period, and the repayment period. And you find that for the commercial banks, it's approximately 70% of the asset value, that's the loan amount. And then for the non-bank lenders, it approximates 75 to 90% of the asset value. So in terms of the financial history, what will a commercial bank need from you? Of course, active business account, at least 3 months. And then you have to demonstrate the ability to repay the loan with preference to SACCOs. The commercial banks has a preference to SACCOs and not non-formalized groups. And this is what, again, we'll look into how we can scale the operations of the transport model or the financing model. And then the other thing was the 6 months of banking with that particular bank. And for the non-bank lenders, we have M-Pesa statements of 6 months. Looking at the loan processing period, we have 1 week up to 1 month wait. At times, of course, it depends on your previous relationship with the bank. And then for the non-bank lenders, you can apply these. You can always apply via mobile handset, and then the approval is within 3 days. Looking at the repayment period, it's monthly for the commercial banks, and for the non-bank lenders or the microfinance institutions. For the asset financiers, it's daily, weekly, or monthly. And of course, the financial institutions operate, but then with some challenges as well. So some of the challenges that they cited included the high rates of defaulting. There is a deteriorating payment behavior among lenders. And then there's lack of gender disaggregated data. They often lack data on women and men. So these, of course, they often run their adverts and campaigns. They do not commit these adverts to women. And then think the most concern for them was the unpredictability in the government regulations. You find that there is always lack of confidence in the business environment. Of course, with this, then they can't commit to a long-term goals as per financial institutions because of that unpredictability in the sector. We also uncovered some of the unethical business practices by asset financiers and the insurance companies. And I know most of us are familiar to this. You've at one point gotten a text from somebody telling you to remind somebody to pay a certain amount they owe. And of course, this leads to a data privacy breach. So we have the use of intimidation, of course, through the digital lenders and their agents, just reaching out to any contact person, just like trying to remind them as well. We have another one that is called debt entrapment or the bundle financing option. You go for a boda loan and then you get other complementary services. You get a phone, you get access to a TV, and then of course you'll get caught up in this cycle of debt. And then we have the non-remittance of the claims. This is to the insurance company. And of course, the issue of the fake insurance. You will find this once you get caught up in an accident, then you will uncover that your insurance is fake. So these are some of the unethical practices that we found very common in this space. And yeah, we are trying to look at ways in which how can we minimize these practices, try to make the environment fair for everybody to operate. With that, then, of course, we had talked about the different financing model, and just in this table, we are trying to provide a comparative analysis of the different financing model. We had 6 models. So the first one was the self-financing. This comparative analysis will compare based on the key features, the advantages, the limitations, and the user group. So for the first one, we had the self-financing. Of course, here, some of the key features is borrowing is not involved here. You make use of your personal or the formal group savings, family contribution, or the community support. Some of the advantages here, it's flexible and you get to control the asset or the vehicle immediately. It's important to stress that there is no stress from lenders or interest rates. And of course, some of the limitations is you might miss out on important market offers. It might take you long to save. And then now the income level now will determine the quality of the asset that you get. And just looking at now the user group, of course, you will find that the user group here is the workers on stable salaries, workers with disposable income, disciplined savers, and of course, we had the old entrepreneurs. Looking at the next financing model, that was the group lending. So some of the key features here is loans is given to registered groups. So these groups usually consist of 10 to 30 members. All the group members are responsible for the loan repayment, which is a very important feature for the group lending. And some of the advantage here is low to no collateral needed. Of course, the group itself will serve as the collateral. And then members are accountable through the vettings before joining these groups. Of course, with group lendings, then you have to know each and every member joining these groups. The other advantage here is, of course, it empowers women through programs such as chamas and women cooperatives. For the disadvantages with this group lending, of course, people often disagree. So disagreement among members, and then the lengthy procedures slowing loan processing. As mentioned earlier, some of the financial inclusion initiatives by the government that cited the lengthy procedures that slows the processing of loans. And then we have members cannot pursue individual ventures. Of course, it has to align with the group's lending. The primary users of this group lending are the registered women chamas, SACCOs, and the youth groups. Moving into the next financing model was the hire purchase and pay as you go. The key feature here is there's initial deposit, which always range between 10 to 30%. Submission of payment is daily, weekly, or monthly until you make the full payment. So the advantage here is The payment without default, then you are able to build your credit profile, and then the potential asset owner begins to use the asset immediately. So once you make your initial payment, then you're able to start using the asset. And the other advantage here is you can predict the payment that is expected of you at the end of a particular period. So say if you're expected to pay a certain amount at the end of 6 days, then you're able to pace yourself and then determine the amount that you'll be able to pay. The disadvantage here is the amount paid is cumulative over time. Of course, it's significant, as you can all attest to this. And of course, in case of default, the asset can be repossessed. Some of the primary users of this hire purchase or the pay-as-you-go model is those who are aspiring to get into the sector and investors. And then the other model was the blended financing, which in particular, it's the use of public and philanthropic capital to catalyze investment. So that's the key feature with blended financing. Some of the advantages here is sharing of risks in form of credit guarantee schemes. And then it's we have the concessional funds that can help, again, subsidize the rates, which make these transport assets affordable. And then another advantage here is the structure usually targets underserved communities, looking at the social impact. And with blended financing as well, the innovation can result with this particular model. You can pilot studies, you can pilot models, pilot programs, and then gauge them based on success. And then looking at the limitations of the disadvantages here, of course, it involves a lot of stakeholders. So the coordination between the multiple stakeholders might be complex. You'll need to involve donors, government agencies, financial institutions, those who are working to support women. So those are the support organizations. And the other disadvantage is it depends on the donor support or other external funding in form of grants and subsidies. So the primary user for the blended financing is the NGOs and government affirmative action implementers. Looking at another model, which was the digital payment and lending platform, the key feature here is app-based or mobile loans. So some of the advantage with this, it's easily scalable across large geographic scope. As long as you've got an access to the internet, then you're able to access a digital lending or payment platform. The other advantage here was it's easy to access with only a smartphone, and internet has the primary requirements. Of course, it eliminates the need of so much paperwork as long as you're able to register your details and log into your account. The limitations here, there is little flexibility in terms of when there's economic shocks. Trying to look at our sector, which is largely informal. If there is any informal, if there is any economic shock, then it won't be flexible for you when you're somebody servicing a loan with a digital lending platform. And then we have the data privacy issues, which arises from access to your personal and sensitive information. And the other limitation here is the short loan tenures, which of course can force you to divert some of the basic needs, the money for the basic needs, to avoid defaulting. And the other limitation is the barriers to smartphone and internet access, which are the key requirements to getting to access some of these services. The primary user here is, of course, it's every adult with access to smartphone and access to the internet. And yeah, that the other financing model, I can see Olivia. Olivia, I think we can address your question at the end of the presentation, if that's fine. Yeah, so you can just hold on a minute, then you can address your question. We have the micro leasing, which is the primary feature for the micro leasing here is the asset is not owned, of course, it's leased. Some of the advantage here is the lessee can easily walk away if it's not feasible. And then it's include this integrated support, which includes servicing, the insurance, the licensing, are mostly covered within the agreement. And then with a small deposit, you can immediately use the asset. So the limitations in the micro leasing here involves you cannot use it as a collateral since you're not the owner. And then of course, we are looking at issues of possible embarrassment in case of repossession. So if this, of course, it's done in the public, then there's that bit of possible embarrassment. And then another limitation is the asset users are at risk of losing the only tool that's meant to empower them in case due to these informal arrangements. And then the primary users here is for this micro leasing is those who are just starting out or workers in the informal sectors. With that comparative analysis, I hope now you can get the clear picture between the key features, the advantages, the limitations, and the primary users of the different financing models that we are able to analyze. And with these, then it takes us to the point of baseline, the survey recommendations, which we have grouped into the features of the model and the scalability of the operations of these models. So I'll just jump into the features of our gender responsive models based on the findings that we had. So looking at issues of flexibility, we find that women prefer weekly payment as compared to daily payments. Of course, this is to just cover their backs in case there are shocks in the economy or if the business is not doing well. So for them, the preference is weekly payment as compared to daily payment. So we have lower standardized rates, just trying to cap the interest rates to a certain level. Of course, these will help more women get into the sector. And then the other important feature here is women do not have issue with longer repayment periods. They know that at the end of the day, as long as it's safer and better aligned with the realities, then it would suit them. The other one is flexibility in terms of payment. And of course, we talk about it, which closely relates to the weekly payment as compared to the daily payments. Another important feature here is low to no collateral requirements. Of course, as alternative to group guarantees and the credit schemes, which we've looked at under the blended financing. We're also looking at the integrated support, which includes the services, the insurance, the licensing, the business management, and financial literacy training. So we are looking at issue of just not giving the asset, but also how do you operate this asset as a business? So we're looking at this training, the business management training and the financial literacy training. The other feature here is the group lending options, which of course, when you access a credit as a group with a common objective, then the group is able to act as a collateral instead there's that joint liability. And then we have mentors and peer support. We had talked about these social recognition. So this, of course, it helps women get into the sector and grow. With that, then we'll now look at what are the strategies for scaling a gender responsive financing model. The importance of data, of course, to just continue gathering data, gender disaggregated data, which we had early identified as some of the challenges. And then implementation of credit guarantee schemes and creating awareness of the utilization of those schemes. And then, of course, with the credit guarantee schemes, then there's that reduced collateral demands. And then it helps you build on your credit worthiness and the support and supporting business growth. The other strategies for scaling the operations of this model is the capping interest rates on digital lending platforms. Of course, at the introduction of this presentation, I talked about high interest rates. So we'd like to, if we're to scale the operations of this model, then to cap that interest rate to a certain level. And of course, I think yesterday there was a bill that was introduced to Parliament, which will see these interest rates capped for the digital lending platforms. The other strategy for scaling a gender responsive financing model is now supporting the formalization of registered women-led circles. We're looking at women operating in groups, particularly for those women from the low income areas. Then we've been able to group them together, offer these support such as the financial literacy, the business management, and other support which will help them thrive in this sector. We're also looking at partnerships with microfinance institutions and other stakeholders such as vehicle manufacturers. Of course, these will help in increasing access and then scaling them based on gender inclusive financing options. Under blended financing, we talked about the piloting of certain programs. Of course, we trying to scale these, then we are able to pilot some programs that which based on their success, then now we can scale to different localities and different geographical areas. The other strategy for scaling a gender responsive financing model is we are trying to embed the digital literacy support and other capacity building programs. We understand the access to smartphone. If you're a woman operating courier services or doing deliveries, then you need to understand your understanding of your digital literacy needs to be, it's important to thrive in this sector. And that's why we're trying to embed it in our capacity building programs. And then, of course, we have to continue the policy advocacy for gender responsive financing regulations, which I think with these will help in influencing development of these gender responsive financing options and products. I think with that, then it comes now to the point of, with this presentation and the closure of this project, what were the next steps for Flown Initiative? We are trying to mobilize stakeholders' commitment to gender responsive financing and transport assets initiatives at various levels. We are looking at 4 partners to help us digitize our women in transport bookkeeping records, which at the moment we are operating in 3 chapters of Nairobi, Nakuru, and Machakos. We're just trying to digitize these records, and then we are looking at partners in actioning other areas of the research recommendations. I think with that, then I'd like to take this back to Lucy to just handle the Q&A. Thank you.
Thank you. Thank you so much, Evans, for that great presentation. And just to again thank everybody who is joining us today. And as Evans, you grab a glass of water in preparation for the Q&A. Please, our participants, please continue sending your questions and comments through the chat box. And I can see we have a few questions. And then just to remind you about the conversation for the day is focusing on inclusive financing models for 2- and 3-wheelers, basically looking at considerations to accelerate access and ownership of these transportation assets by women. This study was conducted in Nairobi. But as you can see, and from what Evans has presented, the findings can actually be replicated in other regions, including in the e-mobility sector. Another kind reminder is to continue following us on our social media at Flown Initiative. And with that, I'll dive into the Q&A part. And if you are ready, Evans, I'll go ahead and ask the first question from Crystal Coyle, who is asking, why do these gendered barriers for financing exist in the first place? And to follow up on that, also asking what goes through a financier's mind when it comes to gender. And maybe as you think about that, Evans, you can also tie that question with another question that was asked by, let me get it right, Pawani, who is asking, how do these women afford smartphones required to do these jobs, or do they have smartphones? Again, as we wait for Evans to respond, if you want to ask your question directly to Evans, you can let me know or raise your hand, and then I'll go ahead and grant you speaking permission to address us. Thank you. Evans, over to you.
Okay, thank you so much, Lucy, for the questions. So first, I'll look at the issue of gadgets or access to smartphones. So, and this is one of the things that we identified, that when you go to an asset financier without, you do not have access to a smartphone, then there are these complementary services that when you want a motorbike, then if you don't have a smartphone, then we have complementary services such as smartphone, TV. Then, of course, the risk of this is you get caught up in this cycle of debt where at the end of the day, you are servicing a loan on a motorbike, on a smartphone, and a television, for example. But so if you do not have access to a smartphone, then of course, the other issue is you will not able to do the online jobs. So for you, the job will be based on what we call the boda boda stages, which of course, another issue here is it exposes you to the harassment, the physical harassment and other forms of harassment. But yeah, access to smartphone is a huge challenge, which if it's not there, then arises these other issues of the complementary or the bundled financing options. If you could ask the next, I hope that addresses in part your question.
Actually, Pawan is raising their hand, but before I grant you permission to speak, allow me ask the other question I had asked earlier, Evans, and then maybe they can ask questions. So the other question was from Christo, who was asking, why do these gendered barriers for financing exist in the first place? What goes through a financier's mind when it comes to gender? Evans, if you can respond to that.
Yeah, so these are general assumptions that women are not credit-worthy. So I think for first is looking at from a point of profit-making perspective for them is who will be able to maybe if I get asset financial, if it gives you like a boda boda loan, then the assumption is a man will be able to pay. Which I don't think it's the case. But then it's also an issue of lack of gender disaggregated data, just to point them into the right directions of who is able to like pay or not pay for these loan products. I think with that, we're just trying to influence or just trying to change the behavior of the environment or the sector, how it's set up. So we are looking at behavior and mindset change. And of course, just stressing on the importance of having a gender disaggregated data, which of course from there you can act based on some evidence. But then largely it's due to lack of data and operating from a point of profit making.
Thank you, Evans. Pawani K, maybe now you can ask your question, or maybe if it wasn't answered well, you can seek clarification. Please unmute yourself.
Yes, can you hear me now, Evans?
Yes, loud and clear.
So I basically wanted to understand, just like you've done an intensive research and come up with also actionable insights on financing of two-wheelers and three-wheelers. Is there any research or is there any experiment or suggestions that have been done in order to also help the access to smartphones easier? Because like you also mentioned in your presentation, a lot of times bikes or boda, I think that's what it's called there, right? So bikes or taxis are also available on a per day rental basis. You can rent it from day to day, even without having ownership. But without smartphone, it is completely impossible to do a job with a platform. So are there any finance models around smartphones? And my second question is that for two-wheeler jobs or especially if these are two-wheeler taxi jobs, are women comfortable having male passengers or male riders? Because in two-wheelers there's also physical contact. We also tried onboarding some female riders to do two-wheeler taxi jobs, but none of them continued working because they were not comfortable with male riders. And have there been any kind of successful interventions to tackle this, or how do you see this problem?
Yeah, thank you so much for that, Pawani. So I'll first start with addressing the last question in terms of if the female riders okay, the limitation here is they are able to operate, but then within certain timelines. So you find that they'll be discouraged from operating at night, say from 7 p.m. due to like this. At that time, they have the increased cases of harassment, and of course, their safety here is not often they're not sure of their safety when they're operating at night. So the limitation is they will operate within certain timelines, mostly during the day and not beyond when darkness sets in. In terms of if there are any measures that have been taken to address these, not that I could find or not that we could find. It then again limits the women's timelines to operate, but then just trying to balance between the different responsibilities. Then they say then they're able to focus on other responsibilities for them, like caregiving and other responsibilities. I don't know if Lucy, you've got the first question.
Yes.
There was another question on whether the organization supporting women towards access and ownership of mobile phones, and maybe you can talk about that.
Okay. In terms of yeah, access to smartphone and if there exist any organizations, again, not there's limited data in this particular sector, so we didn't really get so much information on if there's any organization out there. But then, of course, it's important that in this discussion here, we might have an organization that maybe focuses on that. Then we are able to get direction from them. But then from what we are able to gather, we didn't really find much on that. Yeah.
Thank you so much, Evans, for that. And maybe I can read one comment from Wanja who says, women are better planners and can handle weekly payment as opposed to daily payments, which work better for men. I think I'm in agreement with that. And also there's another comment from Idrisu Seidu from Ghana. So you say, do women working in the three-wheeler industry belong to any unions or association? Similar to those we have for minibuses, share taxi, and three-wheelers in Ghana. I believe that if such unions exist, especially one dedicated to women, it could make it easier to address these needs through decision-making and planning processes. Maybe that's a component that we also need to explore and see whether there are any recommendations that can actually improve access and ownership. But just to mention, here in Kenya, most of the unions work independently, and I don't think there's a point they meet with the financiers. So again, that's something that we can actually explore and see what recommendations or options are available. So I'll move on to the next question from Chris Elsie. Elsie, I lead a disability organization in Kenya. I am keen to understand how inclusion and accessibility has been mainstreamed in the whole continent. And I can see, Elsie, you're raising your hand, so maybe I can just grant you permission to ask your question directly to Evans. Just give me a second. But maybe Evans, you can be responding as I grant the right to speak.
Yeah, thank you, Lucy, and Elsie as well. So yeah, in terms of course, here our major focus will be with the vehicle manufacturers in terms of making the designs of the bikes inclusive, even for a person with disability. And this again was something that was cited in the study. Just the recommendation was to bring on board in these design tables the representatives, and not only the representatives as well, but then also persons with disabilities in the design table, and also women as well in the design table, just like to provide their insights into what would make them make the designs of the bike inclusive for them, because you find that initially, or as it is right now, there are facets of this sector that are often not involved in design. So it's important, again, to just like ensure that persons with disabilities, women, and other vulnerable groups are brought on board on the design table to just give them insights.
So Elsie, was your question answered? Thank you.
Yes, partly. Thank you so much, first of all, for this very, very insightful presentation, and also for the answer to the question. Yes, I agree. Design is not inclusive. There's also the other area of financial inclusion as well, of persons with disability, and especially women and girls with disability. That's an area that we need to speak to, so that they can also be able to be economically empowered and participate, without discrimination. That's an area for inclusion as well. There is also the area for information and communication inclusion, so that when such initiatives are rolled out, then that information is also accessible in formats that they can be able to quickly understand and quickly participate, because there are those who have capacity to be able to be in such programs for the 2- and 3-wheelers. So that conversation needs to be had, so that we do not leave anybody behind. And especially in the transport industry, where a lot of infrastructure is inaccessible. There is also the area of social inclusion, where we have prejudices, attitudes, and barriers that really discriminate in how a lot of people within the industry and financiers would feel that persons with disability do not have capacity to be in such a programming. So social inclusion is also an agenda that really needs to be looked into. And when I looked at the recommendations, the last slide on recommendations, if you could kindly put that up, the very last slide. Yes, I was hoping that inclusion would be one main agenda on the very last slide in the next steps. There was a slide that was speaking to the next steps. I was looking to see that there would be also very conscious and deliberate effort to speak to the inclusion agenda, so that as we work with women in this industry, we're also disaggregating the data into how many of these women have disability, and within disability, also the intersectionality and identities within disability, because again, it is not homogeneous. What types of disability are represented? Then what are the reasonable accommodations and modifications? Even as we move towards the universal design, what are those that we can accommodate and provide for just reasonable modifications, so that they can begin to be included, even if in terms of conversations, as we are looking for inclusive transport itself. So I would propose, if agreeable, that we can look into a next step of the inclusion agenda as one that needs to be also flagged out. Thank you so much.
Yeah, I think we are all in agreement with that, the issue of social inclusion, accessible formats of information, and of course now for the next steps, and we check that as some of the next steps in terms of inclusion of persons with disabilities, disaggregating gender data into different types of disabilities and so on. So yeah, I think we are all in agreement with that. I think Lucy.
Yeah, thank you so much, Evans. And I can see it's already 1 p.m. and we would like to end at that, unless there is one pressing question that maybe we have, and we can extend for 5 minutes if you allow us, so that we address one last question on, again, let me just get this correctly. So what do you think is the most preferred financing model by low-income women trying to get into the sector?
Yeah.
Evans.
Yeah, thank you, Lucy. Ideally, the most preferred financing model should be able to incorporate some of these features that we've mentioned. But then for somebody starting out, for a low-income woman, we are looking at the group lending options, because within this, you're able to access a credit as a group with a common goal. As long as you've got the common goal, then it eliminates the need for that physical collateral, and instead there's that joint liability. So from our point, we are looking at using the group lending options to just like get into this sector, and then now you can trying to thrive and then advance in the sector, you can explore these other features of a gender responsive financing model. But then it's important to stress that ideally a preferred model should be able to incorporate all these features that we've talked about.
Thank you so much, Vincent. Once again, I would like to thank all of you for making time. We hope this webinar has not only informed you on the features of our sustainable financing models, but also prepared you to continue advocating for inclusion in this financing space. And also, Elsie, we hear you, and these are some of the recommendations that we are going to include in the next steps as flown, and also the partners here, the participants here. I know you've picked something that you feel relevant, and you know you can be able to take up with you and continue spreading the word on inclusive financing models. So if you have further questions or would like to engage us beyond this webinar, please feel free to write to us at communications@floninitiative.org. And also remember to follow us on socials, on LinkedIn, on Facebook, on X, and we should be able to keep the conversation going. With that, I wish all of you to have a lovely rest of your day. Thank you so much.